Hey there, financial freedom seekers. Welcome back to the channel. Before we dive in today, hit that subscribe button if you want more content that could literally save you thousands of dollars. Today, I'm sharing something that changed my financial life. A perfectly legal tax strategy that most Americans have completely forgotten about. Imagine opening your tax return and discovering an extra $15,000. That's not a fantasy. That's exactly what happened to me when I rediscovered this overlooked tax provision that the IRS doesn't advertise, but is 100% legitimate. Did you know that 82% of Americans overpay on their taxes every single year? According to the Government Accountability Office, the average taxpayer leaves $2,000 on the table annually by missing deductions and credits they're entitled to. But what if you could reclaim even more? When I first discovered this strategy, I was skeptical. It seemed too good to be true. But after consulting with my CPA and diving deep into the tax code, I confirmed it was completely legitimate. The best part? Anyone can use it, regardless of income level. The loophole I'm talking about revolves around something called cost segregation for real estate investors, but with a twist that makes it accessible, even if you're not a major property mogul. Most people think of depreciation as something that only applies to large commercial buildings or rental properties. But there's a provision that extends similar benefits to certain homeowners who work from home. Let me break this down simply. The IRS allows depreciation deductions for property used for business purposes. Most people know about the home office deduction, which gives you a tax break for the portion of your home used exclusively for business. But here's where it gets interesting. Combined with the 2017 tax cuts and Jobs Act's expanded bonus depreciation rules, you can accelerate these deductions dramatically. Here's how it worked for me. I run my online business from my home, using about 25% of my living space exclusively for business purposes. Rather than taking the standard home office deduction, I worked with a tax professional to perform a modified cost segregation study. This allowed me to identify specific components of my home, from the electrical systems to the flooring used in my office space, and depreciate them over a 5 to 7 year period instead of the standard 39 years for residential property. When combined with bonus depreciation, I was able to deduct a significant portion upfront in the first year. This created a substantial tax shelter for my business income. For me, this resulted in approximately $15,000 in tax savings over a 3-year period. Now, I know what you're thinking. Is this actually legal? Absolutely. The IRS specifically allows for cost segregation and depreciation of business assets. The key is in the proper documentation and application of the tax code. According to a 2023 study by the National Association of Tax Professionals, less than 8% of eligible taxpayers take advantage of accelerated depreciation strategies. That's millions of people leaving money on the table because they simply don't know about these provisions or think they're too complicated to apply. Let me be clear about something. This isn't about cheating the system. It's about understanding the tax code as it's written and using legitimate provisions designed to encourage business investment and growth. The government created these incentives deliberately, but they don't exactly advertise them. Now, this strategy isn't for everyone. You need to meet certain criteria. First, You must genuinely use part of your home regularly and exclusively for business purposes. Second, this works best for homeowners who have significant business income to offset. Third, proper documentation is absolutely essential. You'll need to work with a qualified tax professional who understands cost segregation. One viewer who followed my advice last year messaged me saying, "I've been self-employed for 10 years and never knew about this. After implementing your strategy, I saved over $8,000 on my taxes this year alone." The statistics speak for themselves. A 2024 survey by the Small Business Administration found that self-employed individuals who properly leverage accelerated depreciation strategies pay an average of 22% less in taxes than those who don't. Now, let me address some potential downsides. When you sell your home, you may need to recapture some of the depreciation taken. However, with proper planning, this can often be offset through other tax strategies like 1031 exchanges or opportunity zone investments. Also, this strategy requires upfront investment in professional help. A good cost segregation study might cost $2,000, $4,000, but the potential tax savings can be many times that amount. I'm not telling you this to brag. I'm sharing because financial education changed my life, and I believe everyone deserves access to these strategies, not just the ultra-wealthy with expensive tax advisors. Before I implemented this strategy, I was paying nearly $20,000 in federal income tax annually. After proper planning and documentation, that number dropped to under $5,000 in my best year, while my income actually increased. Remember, I'm not a tax professional, and everyone's situation is different. You should always consult with a qualified CPA or tax attorney before implementing any tax strategy. But armed with this knowledge, you can have an informed conversation with your tax professional about whether this approach might work for you. If you found this information valuable, please hit that like button and subscribe for more financial insights that the average person never hears about. Next week, I'll be covering another overlooked strategy for legally reducing your tax burden through smart retirement account planning. Until then, remember, it's not how much you make, it's how much you keep. Take care, and I'll see you in the next video.